AVWAP or AVWAP, however you want to pronounce it, is this indicator your magic ticket to trading profitability? Well, in today's video, you're going to find out. You're going to learn what AVWAP is, or anchored VWAP, and whether or not it works. And you might say, Leo, how are you going to determine if it works? Well, for those of you who don't know me, my name's Leo Smigel. I'm an algorithmic trader where I test things to see if it works in the market, right? I've always heard, hey, yeah, this works in the market or this works in the market. And it's just like, does it really? Do I really want to put my money behind whatever that dude said? So no, I like to test things and I post everything on GitHub so you can validate my findings or tell me I'm an idiot and here's where I went wrong. So long story short, everything in this channel is data backed. And how I determined it is I did something called a linear regression against the forward returns. But without boring you to death, if you're interested in that, I explain it on the other video. So in this video, again, you're going to learn what it is and if it works. So let's jump into what a VWAP is. Now, before we understand what a VWAP is, we have to have an intuitive understanding of, the original gangster, which is VWAP, or volume weighted average price, because after all, anchored VWAP is just an anchored volume weighted average price. And once you understand the difference between a simple moving average and a volume weighted one, you can intuitively understand what anchored VWAP is and whether it should work and all of this other fun stuff, right? You have that concrete understanding, and understanding is extremely important. So how do we get that understanding? Well, I find the best way is to do a simple example and calculate this stuff, right? So what would the simple moving average be of two bars, right? Let's just pretend this is 9:31 and 9:32 in the morning. What would the simple moving average be here? Well, it would be $100.50 because it's the midpoint, right? So let's just test that. We add 100 and 101, divide by the number of bars, that's 2. So we now have a simple moving average of $100.50. So the difference between a VWAP and a simple moving average is that VWAP says, you know what? That's not a great conceptual model of a moving average, because if a price has 1,000 times or 10 times, in this case, as much volume, it should weigh more on the moving average. And in the short term, I sort of agree with that. So we can take a look and see exactly what our price times volume is. And we can see that we have 10 times more volume at price point 2. So what do we think our VWAP is going to be? Well, it's going to be higher than our simple moving average because this one here, the $101 had 10 times more volume. So it's going to be closer to $10.90 than, $100.50, if that makes sense. So let's calculate exactly what this will be. So we add these two and divide this plus this. So we got $100.91. So that sort of makes sense in my mind, right? So you have to understand that all we're doing with this VWAP is weighting the moving average by volume, and the more volume, the more impact. So now that we have a conceptual understanding of simple moving averages versus volume weighted ones, how do we add VWAP to our charts? Now, charting the VWAP is really easy in TradingView. You can hit the front slash or go to indicators, metrics, and strategies, and you just type volume or just VWAP, right? Volume weighted average price, or VWAP will get you to the same place. And you'll see here that we have this blue line. This blue line is your volume weighted average price. The green bands around it are just simply bands above and below VWAP. But essentially what we have to understand is, look at this price chart of NVIDIA. We have a lot of volume at the open, which is pretty typical. And we can see that VWAP is very responsive. And then over time, it starts getting less and less responsive. And one of the reasons for that is that these further price bars have to contest with all of the prior volume, right? So we can see that, bar 2 only needs to, it's only impacted by this volume and this volume, right? When you get down to here, you have all of these weights. So this thing becomes less responsive. And is that something that you really want to do, right? Because if you think about the market as a discounting mechanism, typically the most recent or most latest price is the most accurate one. And that's one of the challenges I have with VWAP, and you'll see this in a second, is that it isn't very responsive. So now that we understand what VWAP is and how to chart it, and it's an intraday indicator, let's take a look at this on the daily chart of NVIDIA, where we will anchor VWAP. So in order to get an anchored VWAP, you go up to here where it says forecasting and measurement tools. You click on anchored VWAP and let's select a place to anchor it. I'm going to put it down here, even though the traditional place would be here, just so you can understand what I'm trying to get at from a responsiveness perspective from this indicator. So we can see initially after this earnings announcement, price moves up in a big way. We see that the VWAP is very responsive. Then over time, it starts to almost feel like it flattens out. Well, let me put on the 10-day EMA and you'll see exactly what I mean. So we see that the 10-period EMA is slower, right? And then all of a sudden it becomes more responsive. And that's because anchored VWAP, again, is cumulative, where it takes all of this information, it incorporates all of that ahead of time, if that makes sense. So it has to incorporate all of this, where the EMA is only incorporating the last 10 periods. So there is a potential to create a volume-weighted EMA or volume-weighted simple moving average that is rolling, right? Because think about it, intuitively, the stock market or any market is a discounting mechanism where the latest price typically is the best price. So whenever there's an earnings announcement like here, right, this is on May and it's now August, we have tons of volume in here, and essentially this volume weights even more than some of this volume over here, even though this price is 2 to 3 months later. And that's the big issue that I have, is that if you're saying that there is some type of factor that's less important than price in a market, I feel like you might be mistaken, which is why I think, and from my research shows that VWAP on the intraday makes sense, but anchored VWAP, especially over long time periods, does not. So now that you understand anchored VWAP, you know how to chart it, you understand VWAP and it's an intraday, and you understand intuitively how to calculate it and the difference between the moving averages and the anchored and unanchored volume weighted approaches. Now it's time to dig into the results and exactly how I tested this. Now, if you're really interested in how I tested this, I walk through all of the code on my other channel. And something that I'm interested in is that obviously I dig into this on the Analyzing Alpha YouTube channel, where I cover all the code. How in depth you would like me to go for this, I'd love for you to let me know. And going down to the results here, we can see we have the VWAP alpha and the SMA alpha. So essentially VWAP performed a little bit better than the simple moving average, but neither were statistically significant. And now let's look at the anchored VWAP results. So we can see here how I'm anchoring it is that if there's a volume spike where it's 3 times the value of the 20-day volume moving average, that counts as a volume spike, and that's where we anchor. And we anchor up to a maximum of 50 days or until the next anchor point. And essentially, and that's what all this data is. Then I do the exact same thing, comes up with these equations where it determines, okay, what is the alpha? And here are the results. So for the anchored VWAP alpha, it is 0.00094. For the anchored simple moving average, it is 0.00097. Okay, and for the simple moving average, 20 period moving, these are all 20 period moving averages, it's actually 0.001. So what it's saying is a simple moving average without anchoring performed better than all of those with the anchoring, right? And then the p-values state that they're not statistically significant. You can understand if anything's statistically significant that is this basic, it will get arbitraged away. But the point remains that if anything, these results are saying that the AVWAP performs worse than a simple moving average. It performs worse than an anchored simple moving average, right? Why is that? I was saying this earlier, is that intuitively, I don't like the idea of anchored VWAP. VWAP on an intraday basis makes sense. Anchored VWAP doesn't to me. And the results sort of play out that, you want your moving indicators or your indicators to have the data based on the most recent price because, well, the markets are a discounting mechanism. Using long anchored prices that have a lot of volume early on in the tail, so to speak, just doesn't intuitively make sense, right? So I won't be using it. You might have a different you find something else. But as far as I'm concerned, the data is lining up with my intuitive understanding. I think the anchored VWAP is not worth trading. So hopefully you enjoyed this video. This is more of a different style for me. It's just more of an open conversation. If you like this video, please hit the thumbs up and let me know what you did. If you didn't like this video, let me know there too. Hopefully you found this informative, and stay tuned for the next video where I talk about how an algorithmic trader might actually start trading live on YouTube. So I'm guessing you can guess who that'll be. All right. So thanks for joining, and I'll see you in the next one. Bye.